extremely painful to be able to do that many sound checks in a given day. Good times, bad times. We have good times, some selective market action. We have bad times in the fact that the market, the overall S&P 500 has been in a kind of a trading range, but we've been kind of populating a lot of different decent buy setups, sell signals. I'm kind of, I guess you can't be everywhere as a trader, and you can't be an expert in every single market, they say, but you can certainly try. And I think these markets, and you know what, I look in the a room, the attendance, and I know that there's not a lot of, there's more, today we seem to have more of you guys that have been more veterans in the room than we do new traders, and so maybe the veterans can kind of say, you know, this market, it's like, it's almost as if every time you say, I just went over this in our own trading room, every time you say the market's going to go up, the market goes down. Every time someone says the market's going to do this, it does the opposite. It's almost as if the market's on a mission to make the most people recently more just whatever they say wrong. And it just seems to be, you know, even myself, which I don't pride myself on being right or wrong. I pride myself on actually profiting. And so I want to first take a gander at the advanced decline analysis here and just share this while we're not getting into a trading market analysis, but you know, it kind of goes hand in hand one with the other. Looking at the on-balance volume, and this is one thing we've not yet been able to correct, and it's not just, by the way, it's happened on my Thinkorswim account. It happens on Genesis as well. There's something to do with the OBV and just computer settings. Sometimes it just goes out of whack. So, you know, if it's frustrating for you, it is for me as well. But and I'm not sure what that parameter is. But needless to say, what I really wanted to focus in on is the indicators and your, you know, continued education, and that's what these PUG meetings are all about. What I'm saying is that I thought the markets, to finish my thought process, I thought coming into with the FOMC, with everything that we had a week ago in that time slice, I thought that this market would do something really special. And we did nothing. And then with, of course, we've had today with the Bank of England, and then to look at the market, which is ironic because if you look at the moving averages, they're absolutely flatlined. Today we form a long leg doji in the spiders, and the market closes, you know, right. I mean, it's just bizarre. If you look at your weekly pivots in the S&Ps, for example, you will look at last week's pivot and note that the market, the weekly pivots on a week ago, and so I'll get to that in just a second, but the market seems to be just stuck on a weekly pivot, which is around the 260, 263 handle. And I mean, that's exactly where we are. If you had asked me, is the market going to stay here for the next 3 weeks, 17 straight trading sessions, I would have said no chance in hell. And so that's what I mean by the market seemed to make, you know, even myself, I thought we would see increased volatility. Now, we are seeing increased volatility in individual stocks and individual sectors. Obviously, the most dynamic sector change has been in a very short period of time, biotech, which is launched, and XOP, or as we have the XLE. So two sectors have really come to fruition, and I think that that is something that even we have been looking at, and I think knowing what to kind of run scans in and what sectors populate is kind of neat. So let me get through the special announcements, and then what I want to cover today for you guys is what I think is going to be very important and critical in the coming weeks ahead for hopefully the next time we schedule our another PUG meeting at the end of the month, right? So with that said, scan number one, we all know what this is, a daily buy when the weekly's in a buy mode. Scan number two, a daily buy near pivot support when the weekly's in a buy mode. What is that? I'm going to go through each one of these scans because I think what we're going to want to focus in on, believe it or not, in the next, by August, week of 8/12. I think we're going to want to start to focus in on this stuff right here, right? These scans right there for you guys. That's kind of what I'm looking at focusing in on, and we're going to target in on number 1 and 2 in just a minute. So if you don't want to go through special announcement time period and house cleaning, now's the time to get something to drink. But let me point out, we do have a couple announcements starting Saturday for the VIP members. For those that chose to upgrade and go with the VIP membership, August for your continuing education, August 6th, August 13th, August 20th, from 9 to 11. These will be recorded. We are having our summer mentoring program, 2 hours every Saturday. If you tee off at 8 a.m., you won't join us, but the video recordings will be there when you get back from the golf course. We are doing an ETF review because I believe it's important to kind of set up your own personal watch list of specific ETFs, as well as ETFs that are leveraged and inverse ETFs, which I think as we get into the election year, as we get into potentially an adjustment with the Federal Reserve and maybe global rates, which seem to be, with Australia, I would have banked on the fact that with the ECB and the Bank of England last month not lowering rates, I would have said, and I was saying that I think that the Fed has a little bit more ammunition. The first step in, adjusting interest rates higher is to stop lowering rates, and we started to see that. Except for a week ago, we got the Aussie central bank, the Australians, they lowered rates, and then again we have Bank of England doing what they did this morning. So we are going to be looking at ETF review, last conditional breakout tactics, and I got a special announcement for you VIP members there, because this is kind of like I'm pulling double duty, triple duty in life, but I'm pretty excited about this next release here coming up. Option strategies, my favorite option strategies that we did with mentoring and directional trades. RS analysis, relative strength, getting most out of that relative strength page. Scan number 5, to go over that in depth on scan number 5. And of course, volume indicator case study reviews. And that's some of the topics that we'll be covering in the next 3 sessions. Another special announcement just to get through. We have a 3-day investment seminar for today's active traders titled, and the subject is the Trilogy Trading Method. The Trilogy methodology. It's not a new system. It's just conceptual, using 3 different things. And you're probably going to say, I bet John's going to talk about that last conditional change. And you would be right. But we're going to, that's part of the seminar that we're doing. This is a live in-person seminar, one-on-one down here in South Florida. And it's September 24th, 25th, and 26th. So if you have not signed up and you were thinking about it, please let us know. Go to the website, personsplanet.com. You get more information. So just wanted to get that out. The pub membership, as always, many of you are lifetime members. And the lifetime member, I think no one has to do a single thing if you don't want to. We still have our monthly meetings. We still receive updates on the TradeStation versions. The last one that was updated was for quarterly pivots. Obviously, customer support between Virginia, myself, Ben. We've got another guy coming in. Access to video tutorials. We've got Mary as well. Don't forget that I didn't mention Mary. And then we get Jeff every once in a while, and Jeff will be at the seminar in this September. I thought what was pretty, someone had mentioned insanely better. They liked the fact that they had some of the personal indicators when they added to the annual membership, which also granted access for summer mentoring. In addition, we have the VIP class, which also gives us upgrades to my personal indicators, but also to my personal scans. So, I mean, as a quick review, and again, TradeStation platform, lifetime users, you're still getting continued education, free updates on the TS versions. Like I said, the last one was on the quarterly pivots, which were added on 9.5, customer support and access to the videos. The PUG annual membership, the $749 upgrades to our personal indicators. We still get everything, including the summer mentoring session. And the VIP PUG Club annual membership gets upgrades to my personal scans, along with the personal indicators. And here's what we are putting out, which is what I said I'm working on extremely diligently and in backtest mode right now. My Trilogy scan and radar screen alerts. Now, Jeff doesn't even know this, and he's going to, I've done this behind his back. I haven't even let him know, but it's something we've been working on, and this is coming out pretty soon. So for those VIPers, you're going to get the Trilogy scan, which is the pretty much one of my favorite types of breakout moves when we get in the markets. It's just an added bit of confidence. So this is kind of cool, and this is all a part of that. So I just wanted to go through. If you want more information on that, certainly give us a call or email Mary, mperson@personsplanet. And that concludes our special announcements for today. Now, let's get into what I really enjoy, and that's trading and looking for opportunities. And I got to tell you honestly, as much as everything in life, nothing is perfect. There's always something out there that could be better, and there's always products and trading platforms. Everyone has their nuances. One is better than another. You know, certain brokerage firms, you know, I mean, let's face it, interactive brokers, let's talk interactive brokers for a second. Bottom of the barrel, great execution, really cheap rates. So for, I mean, for rates, can't beat that. Everyone here, I'm going to just go out on a limb and say you're probably Thinkorswim clients. Thinkorswim, Toss does a phenomenal job. Great overall platform for options trading, equities trading. Bottom line, they have some good analytics. They even have Persons pivots there. Can't go wrong there. But let's face it, every once in a while, on big news, on big numbers, on big market events, things go down with the platform. Hard to enter orders on the open, which is why I teach people, if you're in a trade and you're looking to exit and you know you're going to be in a profit, don't wait for the open. Use your theoretical option information and price out what you think the option could be worth and become a market maker and put the order out before the open on the platform so it's resting in the server so they have it. It goes routing so that if you go and try to put an order in, the system's down. It happened last year. It's going to happen again. It's going to happen again. It's going to happen again. You just got to not be able to do the same mistake over and over again. With that said, TradeStation, come on. I mean, every one of you know that there's issues. But I'm here to share with you that this particular page right here, this radar screen, is powerful. It is so powerful. It is, I don't know why no one's been able to copy this, to be honest with you. But needless to say, to sit there and put on an alert and to have indicators, your pivot status, are we bullish or bearish, to immediately know where and how far is a market away, like, say, PayPal. Let's pick on PayPal. Many of you may have seen my tweet a few minutes ago. I did it right before the close. I said we're going to form a daily high close doji, and in looking at the options analytics on the August with 2 weeks to go, someone put out about 1,000 options. I put on a few myself on the 38 strike. I don't ever generally go directional like that unless I really like something and I think the options are priced decently. So for 35, 36 cents, I thought it was a pretty decent low-risk setup considering the fact of where I think the market might get to. Immediately, I used this platform and said, where is resistance and where is support? And if I get rid of this and I act in a more professional manner and just put this highlighted line right there, we can immediately say, you know what? If the market goes up to resistance, I mean, for the month, and again, the month's going to be beyond where my option expiration date is, but we're 12% away from 42. So 42.53 is monthly pivot resistance, and the pivot point is 37.80. Well, that's pretty decent information. At least I know how far the market might, or at least where could it get to. Now, I can see the chart and say, well, what about weekly resistance? And weekly resistance, we're about 2% away, which is 38 bucks. So tomorrow's the end of the week, right? So if this is a daily high close doji, and many of you should all know the rules. High close doji, typically we see immediate results. I know that in the next 2 bars, so that means Friday, Monday, if this thing doesn't show any positive performance, I'm not going to lose a lot of money, but on an option that expires in 15 days, 2 days is a lot of theta decay. But if the market does see some upside for, 35 cents, it's not a big deal. But the reward, I can calculate and figure out whether I want to do the trade. And that's what it's all about. What's my risk? What's the possibility of the market getting somewhere? And that's the difference between my methodology and others. My methodology helps give us timing, direction, and price structure. And that's what's so powerful about this radar screen. How do I put it to use immediately and effectively? If I'm looking at signals that are generating, if the market closes right here in the next few minutes, it's going to generate a buy signal. And generally, buy signals initiate market reactions and we get gap ups. More times than not, we get those gap higher. So running a scan is going to help me at the end of the day. But intraday, going into the close, this radar screen is so powerful, and I hope everyone's utilizing it to the best of its ability. But I'm just going through an exact trade that happened today on the close, and why I made the decision to even put my name behind it in the essence of tweeting it out to like 70,000 people. And those are real people too, by the way. So I generally don't like to put something that's going to, not really work or, that I can't follow. I came into the trading room and I announced it to the trading room. They only had 4 minutes to go to act, but at least there's something there that you can make a decision whether someone wants to do it or not. So when we look at the indicators themselves, I can see that I've got a doji, I got a PPS buy signal, I got a high close doji even, right? And in fact, I got a little uptick in the OBV. For those that are VIPers, we're going to go through the volume indicator, but we have actually a little bit of really spectacular buying pressure coming into the market here, which is something that I like to see. I think anyone that's even looking at a Fibonacci, which I'm just going to throw that out there. I don't like to use the F-bomb a whole lot. But let's go to the Fibonacci and let's look at support and resistance lines. So, from low to high, the pullback here coming into a retracement, and I did that backwards, excuse me. There we go. So as you can see, the market has a 618 retrace, but what more importantly I find appealing is the market came near an old level of moving averages, which I teach this all the time. This is part of my little thing, that we came in and we filled a gap in the market that existed down in here. We have a little bit of accumulation. That big, deep decline in the market came on very light volume, and the volume is pointing up. To me, that improves the odds. Will I make money on this trade? I don't know. Is the market capable of launching and making, advances? Yes, it's done it in the past. Lately it hasn't done squat, but the market could see a little launch. If I was going to put money to work in the market, this particular pattern right there, a couple things have happened that I kind of like. And it did it in the sense of something that we're going to go over right now, running for scans at pivot support. So the market, this is considered a last conditional change candle because it closed below the prior low. So the market did close above a last conditional change. It did break a little trend line, and now it has a PPS. If it only goes up to weekly pivot, pretty cool. If it only goes to the midpoint and fills the gap between this low and that high, this is an area of the gap zone, so to speak. In old school techniques, old school being way back in the day, I was taught that a gap, if it comes and is filled 50%, it's considered successfully filled. So I never look for market gaps in the market between where an old high and a low, that distance. I never look for the gap to be completely filled. I always have, it has treated me better, and this is a little nugget of information. I've always considered gaps, which a lot of times, markets come back down, and they don't entirely fill the gap sometimes. They just come in that gap area, and then it's considered filled. This one, I think, has tried and tested it twice. But anyway, I'm just going through how the heck did we get in and identify this trade, and what makes me more confident to put something to work. I'm looking for a trigger. I'm looking for volume consideration. And I'm looking to see where the heck is it in relationship to its support and resistance. And then I can go on the board if I'm an option trader or a stock trader and say, is the risk worth the reward? Or if I want to just buy the stock, is the risk worth the reward? I mean, and let's face it, if this is the entry on the close, and that's the risk here, right? If the market goes up and just 1-to-1 risk-reward ratio, or just comes up to fill the gap, I'm kind of happy with that 1-to-1. If I look at the market on an overall scale, longer term, and I go, well, here's an interesting concept. A lot of things that I've also shared with you guys is that my little low close doji trigger, a lot of times when the market goes down, either high or low close doji, and fills its 1-to-1 risk-reward ratio, and it really generally expunges that little move. And then when I kind of say, okay, well, it was bearish, it went down, and it's bullish, and it's still in a weekly buy. So I have what now? A daily buy with a product that's in a weekly buy. And more importantly, guys, here's a key. We're kind of in, a channel. And to be honest with you, not that I'm excited about it, but it's in the upper quadrant of the channel. So if the market does get a little bit of lift off, I'm not looking for a huge for an option, paid pennies. So I think what the essence is, this system allows me to make better educated decisions faster. The indicators allow me to get better and faster trend signals, because what that benefits me is, as an option trader, if I get the buy signal before everyone else, I'm paying cheaper option prices. And if I like the sell premium, if I get an option or an idea of a directional trade and I want to sell premium, guess what? I'm getting ahead of the rest of the crowd. And because there's less demand and more time, I'm probably going to get more premium. So either way you look at it, it's kind of like getting in earlier signals makes sense in this day and age. So today's focus is something I think we want to really start to look at, is the power and the importance of not just the scan 1 of daily low close doji or scan 2. I think the importance is, for everything here, start looking at sell signals number 1 on a daily mode, because we're going to probably eventually expire this little upside move. Some of the indicators that we've put out here, like the daily information on the Russell, we're starting to see breadth breakdown. We're starting to see breadth breakdown. The price of the market hasn't really done anything, but the breadth is starting to break down. The breadth is starting to break down. Breadth isn't really accelerating. It's stalled in the Qs. It's kind of stalled here. And so I'm starting to look at a market from just a little bit of evidence on indicator basis, and the tools that you have at your disposal, not just in one stock index, but multiple stock indexes. I'm starting to see the S&Ps, while granted the price is sideways, the breadth is starting to roll over. We haven't seen that rollover yet in the volume, the OBV indicator. However, we are starting to see a little bit of divergence developing, or a setup here I want to talk about today with you guys. My feeling is simply this of the market. I think that the market is capable of testing the highs, breaking out one more time. And by the way, if the market breaks out one more time to the upside, takes out the high, gets everyone all excited, hip, hip, hooray, and we don't see an acceleration on the breadth. Now, this is what I want to kind of share with you. And if the volume starts to show that that rally had no follow through, then I would have to say that, you know what, we've got, you know, probably, let's face facts, where is the market right now on a year-to-date basis? We're about 7.6% gain on a year-to-date basis, 7.6% gain on a year-to-date basis in the S&P 500. You know, what is it, 7 or 8 years in a row? If you make 8%, you double your money, right? Isn't that what it is? The math formula, you know, at 55, I don't remember all these little details because I haven't seen an 8% rate of return in a mutual fund in decades. But the, you know, the old school of thumb is if you could just get an 8%, you know, over rule of sevens. Thank you, Jim B. Rule of 7, 8% gain in 7 years, you double your money. Well, gee whiz, who would have thought when everyone said sell your stocks this year in January or right before Brexit that the S&Ps would be up almost 8%? And so the tools that we've put together to help you is to make better trade decisions on your own is actually really helping you to become, and I'm going to be honest with you, a lot smarter than a lot of registered investment advisors. There is a very strong demand lately, guys. You guys, most of you, in fact, if I look in the room, I know most of your names. The majority of you guys are all individual traders. You know, in the last 30 days since I got back from our seminar at C's, phenomenal. And I don't want to sound like Donald Trump where everything was fantastic and phenomenal, but and amazing. But the cruise was really, really neat, by the way. And when we got back from that cruise, I'm here to tell you guys, I have had so many professional traders. I'm a registered investment advisor. I can't use TradeStation. I can't use TradeStation, because of the professional fees that they're getting whacked with. Bloomberg Terminal. I have Bloomberg Terminal business of mine is very select with a couple people, and I'm getting more requests for our Bloomberg Terminal indicators, which is all institutional, by the way. Not many people have Bloomberg Terminal. What does that mean? Well, something's going on. We must be doing something right. And I think this sector rotation, and the only thing I'm doing right is using the tools that I created. This particular week, we ran scans, guys, you know, looking for weekly high close dojis. And then just running the scan on the HCDs, I know that I want to cover two things with you. Why should we be running certain scans at certain times of the market? And also, what have the scans done for us lately? First thing is, someone had asked me about, what about the end of the month? Well, we don't have an actual, I didn't put up an actual scan. I think we can probably create it and get that to everybody. No extra, you know, not a VIP, just lifetime members would get this. You have to ask me if you think it's important, but just monthly scans, you know, so HCD monthly scans. If you want that, what I do personally is I just take the weekly scan. You see where I ran it twice on 7:30? I ran these like 25 minutes back to back because this is the monthly scans. So I ran monthly scans in the market. So this gives me an idea of monthly high close dojis. Obviously, I know Fidelity National. We actually bought this stock, picked this up back here, and we actually sold it somewhere over here, and I've been watching it go up ever since. It's kind of irritating. But needless to say, we can, and this, by the way, is, even though it's a doji and it closed over the doji, it doesn't go in the rules. It's not after a downtrend. I would not be buying this. That's why we take a look at this stuff. But if you want, it's real simple. You just go to Format and go to Scan Criteria, the little plus sign, go over to the value. You see where it says weekly, and then just change that to monthly. So that's all you really have to do, right? And that'll get you your scans from the different time frames. But if I get a big enough request, I think we can make the scan just as a fixed monthly one. I haven't had a lot of people ask for it. People have asked how to do it, which we've covered before, and I just want to, as a reminder, to reaffirm that you can run your own monthly scans or whatever time frame you want. You just change that. All you need to do is make sure that you remember to go back to format and make sure you go back to changing it to weekly, because come every week when you have your schedule scan to run automatically and you have it Fridays at 4:30 p.m., it ain't going to show you any new scans because you've got it set at monthly. So when you run your scans, you wait till them finish and you go back and you run them weekly. Monthly scans this month, generated a few interesting ones that were kind of, financials was all over the board, right? I mean, I think we got the idea between healthcare and which most of these were biotech and financials. And oh, what a coincidence! What two sectors have launched recently in the last couple days? Right? It's been biotech and the financials. So this particular week, though, on the weekly, I ran a scan, and ironically, I come down to the energies, and here's one, and why we absolutely made this particular recommendation in my weekly thoughts and observations, which I know many of you got. One is Marathon Petroleum. I mean, everyone in the world has been bearish on oil, and yet we come up with an idea that we have a high-quality trade and a nice trigger. So if you do look at this, which is nice because we start to see a rise in volume, right? And then the histogram component is positive in the market. The histogram is positive. The OBV is rising. And what's nice about looking at this OBV is it's making higher highs and higher lows when everyone's looking at selling crude oil. To me, this is a stock that gathers, this has my attention. And so we actually, ironically, Monday, we walk in the door. We have that out in weekly thoughts and observations. I'm not sure if you guys have seen this, but just so that you know, not that you should always back test everything I say because I am over 50. Not that I would, the integrity of misappropriating the truth, but the fact that I could forget. But here we go. So I had a couple of what I thought for our advisory services, Valero and MPC. I'm just sharing with you, how did I get this idea to trade this, right? How did I get the idea to trade these? The entry happened, and what's neat is that a lot of Mondays, and I went through this in the trading room, is that I said a lot of times we get these high close dojis, and then first thing Monday, the market opens a little bit lower, which is really outstanding because it allows us to get filled, and then takes off. Now, this is nothing to do with earnings, safe trade, defined risk, and an outperformance in the market with strong accumulation on monthly volume, strong accumulation on weekly volume. So that's how that made the list. We also had Valero Energy, VLO. Look at the common denominator with both of those two trades. For me, we start to see a positive performance in the histogram. The daily volume's already starting to launch itself up. We have a launch going with the OBV, and then we had a nice little trade which we actually were looking to be honest with you, I was looking to add to the trade, but yesterday when the thing went all the way up to pivot resistance, I said, scratch that, get out of half your trade. And that's, we went a little too far too fast. So I'm here to share with you trades that are happening that we're picking out and identifying where the leadership is coming and how to make better trade decisions. You can't take all the trades, obviously, but what's really neat is that combined with where the trades are located, at pivot zones, and using in conjunction with the right indicators, the momentum histogram and volume, we get better trades. Now, this is kind of critical. This is very critical because I think this is not a part of the package. This is some other work that I do. About 16 years ago, I think it was, more like 25 or 30 years ago. Actually, I'll give you the quick story here. A man by the name, he was a private trader. He was a friend. He was kind of like, he hung out in George Lane's office that I worked at. And his name was, you may hear me tell this story a few times, Ellis Pixley Luke. I'll never forget his name. He went by, I am Ellis Pixley Luke. And you'd look at this guy. He was about 6'2" or 6'3", probably weighed 180 pounds. And his suits were like, he had wingtip shoes. He wore these big ties, these shirts, and his suits were always 2 sizes too big. He was an elderly man, lost a lot of weight. Obviously, these were suits that he had from the 50s, right? So if you can visualize this frail old gentleman, and he's the one that introduced me to cycles. He actually introduced me to this book, and I can't even remember who wrote the book, but he introduced me in this book. It was the Kondratiev wave cycle. Coming out of George Lane's office, the amount of people that I had access to and types of technical information that I was introduced to was phenomenal. And I'll never forget that, and I always give credit where credit's due with Uncle George, or George Lane as I affectionately call him. But I've been involved in cycle analysis, and cycles and seasonals go hand in hand, believe it or not, right? So Gann was big on anniversary dates, 1-year anniversaries, and things of that nature. So anyway, fast forward to I just wanted to give you the background of my interest in cycles. I came up with this concept and this identification of this pattern that we got a lot of market peaks, and about every 55 days or 11 weeks. And I wrote this thing about 11 weeks, and you know, the interesting aspect there is that Fibonacci series numbers, 1 and 1 is 2, 2 and 1 is 3, 3 and 2 is 5, etc., etc. Well, 11 is not a Fibonacci series exponential number sequence, but 55 is. And the funny thing is, 11 weeks, there's 5 trading days, and 11 weeks times 5 equals the number double nickel. And double nickel is a Fibonacci series number, which is kind of ironic because I wrote this article for Futures Magazine. You ever come down to my office, you've been here for mentoring, there's a couple of articles on the wall, and one says the top 50 brokers, and in that says cycles. It was an article that I wrote. It came out in December '02, and I revealed this 11-week cycle. Got a lot of attention, and what was interesting is that right before 9/11, in fact, it's so interesting, guys, to the point where I will share this with you, and I wasn't going to go on this tangent, but the 11-week cycle included some forecast of major tops, included June 1st of '01, 824. And you know what I'm going to do? I'm going to just, if you would like, many of you get this anyway, but what I'm going to do is I'm just going to copy this, and I'm going to paste it in the room. And if you guys want, just copy paste that yourself, and then go look at those dates. And then look at them in the chart. It's pretty bizarre. You know, not all cycles are accurate. Sometimes they come a little bit before, a little after. Sometimes they don't work at all. So, you know, they're not perfect. But what's interesting is that we have the cycle low, and you can see this kind of like cycle finder tool. This was a cycle that the market went sideways and launched. This is the cycle tool. The market went down. The cycle tool. The market went down, went down, went down, went sideways, went major down, did not work, went down, kind of did not work at all, but the market didn't go anywhere, went down. So here's one that the cycle was due. The market went down first and then up. So like I say, some cycles don't work, but what's interesting is that there's a 11-week cycle. I use it to, you know, alert me to where are we in a cycle pattern. Are we near an 11-week cycle high, or are we in the midst of the cycle? Well, we're coming to damn close. That cycle, 11-week cycle, comes in around August 12th, and that's the week of August 12th, by the way. So anyway, I wanted to bring that to your attention, and why I think it's cool to do a presentation, another Hugs group meeting, because many of you know me. You know, I'm pretty forthright, and I like to make sure that people use what they have. I'm pretty value-orientated as a consumer myself, and I think that the work that I put out, I want to make sure that you know how to use it efficiently in the best way possible. Right now, and I say with the unenjoyment report, jokingly, tomorrow is the unemployment report. We always call it the unenjoyment report. And the unenjoyment report, you know, there's a shot we could see the market move up a little bit. And then after that, you know, we've got the Fed meeting, Jackson Hole, Wyoming. And after that, I don't know. But I do know this, that I'm going to start to look at the fact that if you want to figure out where a market's going to go, ask yourself where the hell it's been. And as we get closer to marking an 8% year-to-date gain, and we're, you know, just past the halfway mark for the year and coming into a really bad, poor seasonal time frame for the markets, this is kind of like where I'm going to tell you guys you want to start using combination of daily scan number 1, start looking for that, heighten your awareness to daily sell signals number 1, heighten your awareness for daily scan LCDs number 2. Now, the problem with number 2 is look what it says. You're asking this scan to provide you information of give me stocks that are in a daily low close pattern when the weekly's in a sell mode. So that's kind of important because here's why. There's two things with the logic behind those scans that may populate, and then we'll get into the same type of information here. So we're asking the market to give me, let me pick on Dave and Buster's real quick. I'm looking for the market to give me a low close doji on a daily basis or a PPS sell signal when the weekly's in a sell mode. Okay? So this might be a bad example, but what you're doing is it might generate the sell signal, you know, as it's happening. So here's, listen carefully. Let's say the market, it's starting to turn. And if it's Thursday and you run a scan and you get a daily sell signal, and if Thursday the market's at the threshold where it will generate a weekly sell signal, but the week's not over, it's going to show up in the scan. Let me repeat that. Let me repeat this one more time. If you run your daily scans, if the market is getting ready to roll over on a weekly basis, you might not see the arrow, but what it is telling us is that the threshold of pain has been crossed and that the week, if it closes here, will generate a sell signal. Many times you've probably run this scan and you go, well, there's no sell signal. It's because it's telling you if we lock and load here on Friday, it's going to generate a sell signal. Okay? So if we're looking for the market to go from uptrend and then reverse and go to downtrend, doesn't it make sense to start running scans or focus your attention? Don't get complacent. Spend more attention on running scans on sell signals. But let's be logical. Let's cut our time back. I've put too many sell signals in there for different market conditions. I'm looking for for example, a market that's already been in an established downtrend. I'm looking for a sell signal in an established downtrend. We are not in an established downtrend for the majority of markets. We're in an uptrend right now. So let's take a look at XLU. If this logically makes sense, how do you get better use out of A, your time, and B, the product? So if you think that we are coming to terms of a major reversal in the market, like this is the utility sector. Lately, a lot of utility stocks are generating reversals. So here, this is the current week. Look what we have. This is exactly what I was describing. A daily low close doji when the market is in a weekly sell mode. Now look when I ran this test. I ran the test at 3:27 before you guys showed up today. So this isn't as of the close. But what happened was a daily low close doji, and wait a minute, John, it's not Friday. Why is that generating a sell signal? Because what this is telling you is just what I said. If the market closes here tomorrow and we're here, baby, you've just generated a weekly sell signal. You see what I'm saying? And now all of a sudden, if I start populating more and more stocks in utilities, it's kind of like giving me an idea. Maybe we're overbought. Well, how do you trade that? Well, I mean, XLU, obviously selling an individual stock will give you a little bit more performance than selling an ETF. But after what I would consider an insightful parabolic move from just this year. This is just this year, right? So this is where we've gone and this is where we're at. So I'm thinking the market's probably not going to, especially as the momentum's starting to wane, as far as the momentum's starting to wane, et cetera, I'm starting to think that possibly rallies in this market can be sold, right? So I'm starting to get testifiable evidence of a market reversal in utilities. So that to me is very kind of important in the essence of how and when do I run certain scans. In the yes, okay, so I did run this one as well. 8-4, perfect. So in the essence, in the spirit of markets going from phases, we're probably, with the majority of the stock market, we're in an uptrend. And so sell signal number one is just a PPS sell signal. Sometimes, sometimes, not all the time, sometimes a PPS will come before a low closed doji. But the majority of times, you guys know this, the low closed doji comes first, and sometimes, like we just experienced with PayPal, you get buy and sell signals that also correspond with a LCD or a high closed doji. Why I focus on this more than anything in the world, like here's an example right here. Here's a high closed doji and a PPS buy. Doesn't mean it's any stronger, it just means both criteria's formatted and came into fruition. So in looking for triggers, bona fide triggers, the reason I focus on the HCD and LCD, because it literally is one of the most amazing systems, and that's all it is a trading system, believe it or not. The one-to-one risk-reward ratio component of it is phenomenal. The timing element of it is phenomenal. And the fact that I have over 7,000 stocks that I can run scans on multiple time frames and say, gee, do I want to buy or do I want to sell? It gives me tradable, actionable setups that I don't have to rely on doing butterflies or condors or obscured option strategies around earnings. I can be directional. In fact, this week, I mean, this is pretty crazy. This week, just except for one trade, and they did. I took this trade as well. They stopped me out at Chico's. I'll never trade women's apparel clothing store again. Apple didn't come out down to the 102 handle. Tiffany's taking a little heat, but every single one of the sell signals, all either, for the most part, out of all of these setups, they all either happened, came close to the profit objective, or like in high yield growth, hit the first target objective, high yield growth, HYG. So if anyone ever asks, why do you focus on just that when there's so many other setups? Because they give me timing, they give me immediacy, and they give me projections of risk as well as reward. HYG, by the way, just as a quick review. 2 weeks ago, or as you can see, here's the low closed doji on a one-to-one risk-reward ratio. It hit its profit target. Amazing stuff. I mean, so whether or not you were able to trade it, it gave credible trading information. By the way, on HYG, longer term, we are developing a potential longer term, I said, divergence, which means if we do over the next week or two start to roll over HYG, you want to pay attention. As another thing is you definitely want high yield growth on your charts. Remember last summer, high yield growth was what was to blame to take the stock market down. This year, high yield growth has accelerated to the upside, and I haven't heard any analysts really talk about this that I know of in saying, gee, if HYG took us down, Why isn't anyone saying HYG, which went up and led the market this year, why aren't they following it still? I don't know. It's amazing how kind of like the media works. But the indicators here in of itself with buy and sell signals, HYG, by the way, tell me that's not an important setup, right? Tell me that's not an incredible setup. And by the way, you can bet your bottom dollar we were all over that, and I've been writing about that all year. So HYG, the high yield growth corporate debt ETF, it is a great leading indicator, and obviously you can overlay that and check it out for yourself. But the scans have picked this stuff up, guys. It's fabulous. And I think now if we are expecting the market to roll, you use this tool once again. Number one and number two, you start looking at scans low closed doji 1 and 2 and PPS 1 and 2. And I think you'll get a lot more out of identifying what sectors are getting ready to turn, number one. And again, more importantly, you just turn that right on over to your advanced trading system page and then start just going down the list saying, gee, well, where are we in the relationship of our pivots, right? Is there room to run, or have we, is the market, are we at pivot too many resistance targets? So far this year, you know, this little page, this is why a lot of you have this, is that these two tables, this is monthly and we added quarterly. And when I start to see, just like we did in January, and I give this over and over and over again, when we started to see the majority of sectors and stocks either at their monthly support, and more importantly, they were all at their quarterly support in the middle of January, it's like, you know, my rule is every book I've written, don't sell support. While if people were talking about selling and getting out of your portfolio, I mean, that's insane. A little history lesson. One of the founding members of the Market Technicians Association, his name is Ralph Akampora. Ralph worked for Prudential at the time. It was October of '97. I think it was right around the time of long-term capital management. Ralph came out with a famous buy recommendation in the market, said it was going to go up. And like a week later, long-term capital management, the market puked, and he came out and told everyone, this market's going to go down. Everyone got to get out and get just, it's going down forever. And then I think the Fed and Alan Greenspan adjusted interest rates or something, and then the market went right back up. You know, and this is a fact of our markets. This is a fact. Ralph Akampora got called up in front of a Senate Financial Subcommittee hearing. Can you imagine? You're just an analyst for. He got his ass hauled up in front of a Senate Finance Committee for making those claims on TV. At the time, I can't remember if it was still Financial News Network or the early days of CNBC. I really don't remember, but that is an actual factual event that took place in our history. So the moral of the story there is that this market has in history continued to make buffoons out of as many possible people, and this particular year is no exception. It seems to be very pressing forward, and you know, not all seasonal tendencies are working well. There's a lot of risk in the market, and you know what's up to you is right here, and this is going to help you decide what to do. You know, what's the percent distance between support and resistance? If you got a buy setup and you're 9% away from the monthly support, and you're 5% away from resistance, the odds favor the fact that you've just maybe, and this is biotech now, at this point in time, you probably are losing your edge in buying and getting involved in IBB, right? The fact that it's well beyond its quarterly pivot, which we were long at a lot lower level, and I am not in anymore. And much my tendencies to get in early and get out a little early. But what's interesting is, generally speaking, every time I get in and I get out, market, that's about it. And we have a lot of great opportunities, and how we're finding these opportunities is sitting right here on what I think, honestly, guys, is one of the most powerful tools, underestimated, underused, underrated instruments we have, the radar screen. It really can give us amazing insights. And I hope you guys have found this to be useful in the way that I have and how I use it day in and day out. So between the scans, and I think coming into this year or the rest of the year, let's be professional and think about it is an election year. And you know there's going to be money spent in advertisement. You know there's already money spent in advertisement. More social media. So, you know, Facebook like nowhere like we've ever seen. More ads will probably be placed with Facebook. Is the market right now anticipating that? You know, with revenue growth from what's going to be from the politicians, right? So, you know, I look at this particular market on a longer term, which obviously has not been out enough to really get into the nitty-gritties of longer term. But one thing I got to tell you that I trust my indicators over time, a market, the higher something goes and the lower the momentum rating is, and of course some volume studies, the less I trust wanting to be long up there. So you can bet your bottom dollar that you're going to want to take a few choice names and develop your own watch list. So, you know, many of you don't forget that just because we have, you know, our own listing of stocks, you can create your own page and you can create your own watch list. And all you have to do, quite frankly, is just go down and create if you haven't done it or don't know how to do it, just right-click, go to Insert a Label Row, and just say, type in what you want, personal watch list, right? And then, I didn't type in the right thing, just blah, 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 blah. There it is, watch list. So if you want to watch just Facebook, all right, and you just want to put in, and also you could set alerts. This is so powerful, you could do anything you want with this. And I think that is one of the neat things about the platform, which allows you to see exactly when we will probably be getting either daily, weekly, or monthly, weekly, or daily sell signals. And that, my friends, gives you the heads up. What's happening right now? What's going to generate a weekly sell signal? What's going to generate, by the way, TLT? How did I just pick on TLT? Because the darn thing was flashing. TLT is going to be generating, which is really ironic, it's warning, by the way, of an impending sell signal with a decline in momentum. So if we actually fire off a sell signal here in TLT, it's telling you right now that if we close tomorrow, Friday, at 139.45 at least, it's giving you an early warning of a sell signal. If you're not in that market, and after unemployment report, at least you now have a heads up that says, hey, maybe I could sell some out of the money premium, maybe the inverse, which is called TBT, right? Oh, what a coincidence. In the inverse, because, I mean, it's two different structured products priced differently, but what's neat is if one is an inverse ETF, I would want the one that's giving a sell signal, I would want the inverse ETF to be generating a buy signal. And guess what? It is. So that to me is kind of a cool thing. Volume is starting to show a loss of negative momentum. The histogram is showing a loss of negative momentum. So that means maybe tomorrow we get a buy signal in TBT. We're going to have a sell signal in TLT. It shows that there is possibly a shift going on in interest rates. Once again, proof pudding of how this package is so darn helpful. This year, in January, I can't tell you, and I know I do this every single presentation we do, but we had a mentoring on that day. On January 19th, I had a group of traders in my office doing a week of mentoring. And, you know, during the week of mentoring, it's tough to, you know, obviously run a trade room and do everything twice. But what we were noticing was, for example, look at what you see here in the preferred sector. Banks, all of these names were starting to populate. And I came in the room, I go, hey guys, you know, I'm starting to show a lot of preferred bank stocks being, and the day before and the day after, we started to see a lot of different bank stocks populate in the preferred sector, which makes a hell of a lot of sense. While the preferred stocks aren't going to maybe generate a lot of premium increase, what it did is it generated a guaranteed rate of return. And smart money was throwing money into preferred bank stocks. Now, in a market that's crashing, when the world says sell your stocks, these scans populated that information to me, which was another added insight of information. So there is rhyme and reason for running scans. If the market's in a crash, I'm focusing on buy signals, and I'm paying attention to what the tape or the buy or the signals are telling me, right? So we did have not much going on here, and you know, I don't know many of these common stock names. I knew being this is a muni fund, saw a lot of that type of stuff, but I do know who some of these names are, and that's what, if times are really tough, the last thing you want to do is start buying even preferred stocks. So anyway, I hope today's PUG group got a lot for you guys, at least some good reaffirming information on when you're running the scans, why you want to run the scans, and how to change the scans. And if you ever come into a problem, you know you can always reach out to us. Anything happens, it's kind of an unbreakable product to a degree. You can always download it again through the App Store. And I really have nothing more to say than, you know, good luck, and we'll look forward to seeing you the next session and the next time. And I just wanted to say, in this PUG group meeting, I think you should enjoy this year with these scans, because I guarantee you every single week I run these scans, and every single week I put together, for those that aren't or don't want this, I put this little list out here, and I put this list out, and I write this little report, and I put out exactly what I'm looking at, and the majority of this research and this information is all based on what you guys have yourself. You have more power in your hands than most professional investment advisors. I wish you well, and I hope you got your time's worth today with this. So thank you all very much. And David Kushner just made a comment. I want to make sure I addressed everyone's comments. The weeklies, I mean, yes, I mean, obviously daily is pretty good. And Jim B says, nice call on Valero, too far, too fast. Yes, that was a comment, too far, too fast. You got it. You guys know this. I mean, I think I've been saying this all along. When you get a stock that moves 5, 10, and sometimes 20%, in this environment, we have to take it. We're at a 1 point whatever GDP. We're not in an incredible growth rate. The market's sideways. We're seeing sector rotation. Today it's good, tomorrow it's bad. You know, and then sometimes they sneak one right by us and the market continues to go up. So all I know is, if you're here to make money, you need something to say, where am I buying? What am I selling? What's the strength? What's the weakness coming from? This market is contrived, in my opinion. It is run by computers. There are algorithms out there. I have no explanation why that last conditional change works as phenomenally as it does. But when a stock or a commodity or a day trade gets up to a last conditional change, gee whiz, it just stops dead in a dime. So there obviously is something out there that the powers that be are trading, and it ain't retail clients, that's for sure, guys. So I do hope that you are making the most out of it, and at the very least, it's keeping you more times than not on the right side of the market. Thank you all very much. And again, any comments, they're always well appreciative, and any constructive criticism, we're here for you guys to work together. So we're, you know, any ideas that we can do, we will do. And for VIP club members, Don't forget, man, the trilogy is coming up on the radar screen soon, and I'm excited about it because that's another one of my really, there's a difference between getting a high closed doji and a high closed doji that gives me that it's clear to last conditional change. That's really cool stuff. So thanks everybody. We'll see you next time. Be good.